morning, everyone. This is Ryan Ender with your Wednesday, September 18th morning market commentary. We saw a bit of a correction here in the grain markets yesterday, so let's actually look at the charts for both corn and beans to see just how big this correction is. Let's start off with this December corn chart. Again, the correction in both corn and beans may have seemed sizable yesterday, but look at just the last two bars to the right on this corn chart. Second to last bar is yesterday's correction. The farthest right bar on this thing is last night. We'll see that even though it may have seemed sizable looking at the screen, after the recent 18-cent bounce we had here over the last little bit over a week, we see that this correction so far is still minor. In fact, we can even say by looking at this chart that a little bit farther correction could just be a small technical correction that doesn't mean much, especially if we lack the news here for the corn market over the next couple days. Lastly, in corn, while we're looking at this chart, let's also mention that last week's ethanol report showed an improvement. If we could put 2 or 3 weeks of that together, that could continue this bounce here going on this chart. Now let's switch over to the November bean chart. What you're going to find here is a very similar story. After a significant bounce over a little over the last week, we see that yesterday's bar and the overnight bar are showing just minor corrections here. So again, for the beans, just like in corn, let's chalk this up as just a minor technical correction, maybe missing a little bit of news or a quieter news day. That's all you really need to have a little bit of a correction after the recent surge higher that we've had. Now let's flip over, take a very quick look at the maps. They're going to look similar to when we put this commentary out last week. We see the 1 to 5 day map here first, still mostly no change, above average for almost all growing areas to much above average over Wisconsin and Minnesota. Flipping over to the 6 to 10 day map, we see the trend continues, maybe not quite as warm, but still 4 to 5 degrees above average for 5 straight days in the 6 to 10 day outlook. Once again, exactly what a slowly developing crop or late crop needs to see. And just for fun, let's take a look at the 11 to 15 day map. Again, before we even look at this map, we'll caution that this thing is known to change in as little as 6 hours. But for now, most growing areas warm. A little bit of cool weather up in the Dakotas, but we do see a good 2/3 of the growing area stays above average for yet another 5 days, which again is what most of those people in those areas will want to see. Let's flip over to cattle now. We'll start off by looking at the cattle on feed estimates for Friday's report. We see that analysts are looking for on-feed at 99.3, placements 93.7, marketing's 98.3. Quick look at these numbers would suggest that as a whole, analysts are looking for a supportive report on Friday. That could continue to put at least light support in this market all week long. We also saw yesterday a pretty significant bounce over $1 on a Tuesday when we didn't even see a cash bid yet. But given Monday's 4,000 lower show list, looks like traders are already prepared to factor in $1 to maybe $1.50 higher cash trade this week. That likely comes from the fact that the 4,000 lower show list was a bit of a surprise. Most people were probably looking for 10 to 15,000 higher. So as we always do with cattle on a Wednesday, we'll see what we get for starting bids, knowing that the futures trade is already factoring in that bids should improve at least $1 or $1.50 this week over last week's almost $99 cash trade. So let's keep eyes and ears open for that bid, and let's see what we get on the cattle on feed report on Friday.